Hello, and welcome to another edition of Nasdaq-100. I'm Mark Marex, Senior Director of Index Research at Nasdaq, here to give you a performance update on the index as we mostly wind down earnings season in early March. Now, the month began with a continuation of the recent trend of higher volatility amid recurring negative tariff headlines and a less favorable mix of U.S. economic data. After ending February on a negative note with a loss of 2.8%, a few big down days in early March have brought the index to a net loss position year-to-date. The Nasdaq-100 Volatility Index reached as high as 27.5 intraday on March 4th, highest since mid-December. Predictions for an economic and inflationary soft landing in the U.S. are looking more uncertain, with recent CPI inflation readings coming in higher than forecast on February 12th, interrupting an extended stretch of more subdued monthly readings. Conversely, PCE inflation readings came in rather tame on February 28th. The biggest risk to a soft landing is likely the evolution of U.S. policy on tariffs, which officially went into effect on China, 10%, on steel and aluminum, 25%, and on Canada and Mexico, also 25%, after a one-month delay. Additional 25% tariffs on specific sectors have also been floated, as have a wide range of retaliatory tariffs, along with blanket tariffs on the EU. Expectations are now changing almost daily on which tariffs are up for either broad renegotiation or sector-specific exemptions. All else equal, though, wide-ranging tariffs are expected to boost inflation while dampening economic growth. Indeed, this is already being picked up by economic data, measuring declines in consumer confidence and spending, a rise in the savings rate, and rising inflation expectations. Consensus expectations for additional Fed rate cuts have seesawed between as few as 1 for the remainder of the year to as many as 3 after the recent drop in both stocks and bond yields. Earnings season is nearly over for the Nasdaq-100, with strong beats from Netflix, Meta, and Amazon, while Apple, Tesla, Microsoft, and Google were more of a mixed bag. NVIDIA reported on February 26th and beat its consensus estimates yet again, but the stock had a strongly negative reaction that played out over several days. With more than 90% of the index having reported, though, EPS beat rates have come in at over 80%, and year-over-year EPS growth has been over 24%, notably outpacing the growth rate for U.S. large caps overall. Thanks for joining, and see you again next time.